Big moves again on these markets, Steve, with this dollar rally really kicking off.
Yeah, and it's really impacting cable, but also gold.
Hello everyone and welcome back for another of our Trader Talks videos with myself, Richard Perry, market analyst at Handtech, and also Steve Miley, the market chartist. Now, as ever, we're going to be pointing you towards signing up for our demo accounts on our website, hmarkets.com, where you can also sign up for live trading accounts in 4 easy steps as well. Now, Steve, this dollar strength has really hit through markets across asset classes, forex majors, commodities, and it really is driving the moves, I think, at the moment.
Yeah, certainly dollar strength has been come back with a force in here, having been very weak in here over the last weeks and months. Certainly seen a strong rally. Looking at the dollar index in here, first of all, we reversed that downtrend line that we've got on the charts in here, back above that kind of pivotal inflection point at 94, and with some comments overnight from Evans, which I think have been taken a little bit out of context.
Yeah, that was strange, wasn't it? It was completely out of context with everyone else, wasn't it? That he was sort of even saying that rates could go up again before average inflation hits 2%. That was really odd.
Yeah, but I think maybe taking a little bit of out of context as well, the way it's been reported on it. But nevertheless, it's helped the dollar higher, but it was moving up anyway. So technically, that's looking stronger. And for me, I'm really focusing on, what that's impacting onto the pound and cable particularly. So obviously the dollar strength in here helping cable lower, but we're going to talk a bit more about the dollar in here going forward when we look at gold with yourself. But what I'm going to really focus on a bit more is this is not just a dollar strength story. You've also got all that pound weakness. So the pound is weakening for huge amount of macro reasons in here. We've got the internal markets bill and the internal and global potential for that to cause uproar with it breaking international law. We have rising COVID-19 cases. We have new lockdown measures. We have the EU UK talks still at an impasse, and we had the Bank of England uber dovish, talking about again last week about negative interest rates. All of that's negative for the pound, and then you put that on top of the dollar strength in here. Cable's pointing lower, right?
I mean, I think if you take the dollar index generally, the break above 94 figure was key for me. That implies a move towards 95, 70, 96 area. And you can see on the chart that we showed earlier that there's a big band of resistance, 95 to 96. So we could see dollar index well into that band, I think, now. Now that drives, I think, cable lower. Now, as you said, I think that we've seen the key breakdown below 130 was a big move. The pullback rally failed bang on that 130 resistance and fell over again. Now, I think the 126.50 level for me is important because that was the old breakout levels of the spring to summer highs. Moving above that really did create that as a support band. And if we now break that on the downside, that really does, I think, turn cable very much corrective.
Yeah. Agreed. So for me, that bear trend is very much intact. You say failed exactly at that 130 area in here, which was important. Back lower in here, that level is important. That 126.5 breakout. But then for me, I think targets we could easily be 124.80 before end of the month. Into October we could be down there. Into late September, early October. We've got another week, and then going.
Well, we talk about the Brexit talks as well. That's coming in mid-October is the really important time for that. I think that's going to be a really hairy moment for sterling if that goes wrong.
Yeah. And so for me, this is not beyond being 122, 120 kind of level. Going into Q4 into October. But you're looking at gold. Let's switch to gold, shall we?
Yeah, again, and very, very much another dollar play, really. And the chart that I always like to show is the fact that we've got gold and the dollar very much strongly configured on a negative correlation play. So I think that we've seen that the dollar driving higher is pulling gold lower. The 1,900 level of support there or thereabouts is really important, and that has now been broken. And the breakdown really does, I think, change the outlook for gold, because we saw previously the 23.6% fib level of the big bull run from March to August was a key basis of support, 1926. That was broken and then confirmed with the breakdown below 1900. You're looking at the 38.2% fib. That's 1835.
Yes.
As a minimum, really, I think, as this corrective move goes, because there's not really any support.
No.
You can talk about the March low of 1863, but below that, there's not a great deal of support given the strong run higher. So I think gold turns lower for now. Moving out medium longer term, I'm still happy with the fundamentals on gold, but just for the near term technicals, we are looking a bit corrective now.
Well, yeah, I'd have to agree in here. You've got that low, you've got the 38.2%. I mean, for me, if this kind of gathers steam, that the thing I think was really significant with gold has been so sideways for so long. And typically when you get a breakout from those big sideways, as you know, the acceleration in the new direction, particularly given that we've got a bit of a change of trend, the trend is higher, could be more aggressive. So I can see after that big consolidation and a breakout, even down to maybe you got the breakout levels, previous highs and the 50% coming around that 1760 level.
Yeah, that was a bit of a risk for me as well.
Yeah, so I think you could see as deep as there if we do get this dollar strength, permeating going forward. And the other thing we haven't really kind of just to throw in at the end as well, that all the risks are now around the election, okay? And is that going to see us more into risk off, concerns about the presidential election going into October, November, and then that keeps the dollar bid potentially, and then gold.
I completely agree. I think the dollar is the driver of this. You're not seeing yields doing a great deal at the moment. Risk off, you can see also there's a chart that I quite often show where gold is, again, positively configured, positive correlated with US equities. So how US equity markets move is going to be key for also little near-term signals on gold. But the gold is the main, the dollar is the main driver of this gold corrective move at the moment.
Agreed. Well, good to speak to you, Richard.
Yeah, thanks a lot, Steve, and we'll speak to you all again next time, and good luck with your trading, and come back for more Trader Talks videos.